And why you think we just had a 55% correction in Bitcoin price from the recent highs?
So I think there are a bunch of different reasons, but I think one of the largest reasons and one of the most underreported reasons was the fact that Grayscale's premium over NAV for the Grayscale Bitcoin Trust went away, turned into a discount. And so if you look at that fund in the second half of 2020, that was the largest buyer of Bitcoin. They were a massive buyer, bigger than MicroStrategy, bigger than any other buyer. The sheer amount of coins they sucked up, and part of that was natural demand. People want Bitcoin exposure, so they buy it in their brokerage account through GBTC. It's an imperfect vehicle, but they relied on that. But two, a lot of that was a neutral arbitrage trade. So someone could, accredited investors could buy into the fund at NAV, which basically took liquid Bitcoin, converted them into that fund, made them illiquid Bitcoin. So you had basically off of exchanges into their cold storage, and then they would go and short Bitcoin elsewhere. And then after 6 months, when that lockup period ended, they could sell their GBT shares for the market price, which was generally trading at a premium over their NAV, and they bought in at NAV. And so regardless of what Bitcoin's price did, as long as there were no tail risks of like counterparty issues or something, they would end their Bitcoin short, they would sell their GBTC, and they would extract that premium. And it was essentially a risk-free trade. And they could do that every 6 months. They could take that capital and do it. And whenever they'd finish the trade, even though their positions are off, those Bitcoin are now permanently in Grayscale's Bitcoin Trust, because that's not a redeemable fund. So other than potentially selling some Bitcoin in order to pay the expenses, Bitcoin never really leave. It's kind of a Hotel California of Bitcoin, and so that was a really big contributor to Bitcoin's price going up. And when we had some increased competition at Grayscale. So we had Canada's Bitcoin ETF. We just have generally more ways to access it. So there's a Skybridge fund, right? So there's institutional, basically custodians. More people are able to just use things like Coinbase or use other major exchanges, right? So we've seen their numbers go up. And so there's basically fewer people that really need to rely on say, GBTC trading at a premium over NAV and 2%, fee or whatever it is last I checked. And so basically that with that discount gone, that neutral arbitrage trade can't happen. And so that the biggest buyer just switched off completely. It hasn't been buying Bitcoin. And so if you look at, say, when they're buying when flat, we've had some pretty significant consolidation of the Bitcoin price. And then when you get things like, Elon Musk backtracking on his views on Bitcoin being ESG, or some of these other things like the Chinese hash rate migration, which can cause, potentially forced selling or disruptions. Any of these other things can then come and impact it. But I think, part of the underlying thing was essentially that just, one of the big sources of demand dried up, and therefore the market had to rebalance itself.
How much do you think that leverage played a role in that?
Oh yeah, definitely. That's once those underlying fundamental factors basically, just triggered less demand, when you started to have prices going down, definitely those liquidations, those big leverage positions were another big factor, along with Tesla, along with these other kind of, headline news. And so they exacerbated the moves. And then therefore, if someone was, say, a momentum investor and they're watching a negative price action, they might get out, or, they might not buy when they otherwise might have bought. And so that triggers everything until you have people come in, kind of the buyers of last resort, and say, no, I'm fundamentally long-term interested in this network. I think, say, 30,000 is a great price. And so they come in and kind of try to hold a floor. And so lately in the past, few weeks, it's been kind of testing this floor area, and we'll see how well it holds. But yeah, leverage was certainly one of the big factors as well. But I think, the bigger story is that just the fund has more, competition now. And so if anyone's familiar with, say, equity closed-end funds, they often do trade at a discount to NAV. That's basically, the market's way of kind of, factoring out the expense ratio of the fund, which tends to be higher than, say, passive ETFs, for example. And so if a closed-end fund has a 1% fee, it might trade at a 10% discount to NAV, and so you're basically factoring out 10 years worth of the management's fees. That's pretty common practice in the space, and so it's actually pretty uncommon for these funds to trade at a premium to NAV.
Right.
And so, but Grayscale was, because it was such a unique product. It had such, alpha to it. And so it was the only game in town for a while. And so actually kind of the natural state is to have roughly zero or slightly negative discount to NAV. Now I think when it reaches as low as like almost 20%, I think that's excessive. That's pretty uncommon for closed-end funds to do. So there's still kind of an arbitrage trade where if it ever gets really low, it tends to probably be a trade where you want to maybe go long that fund, and then if you're trying to make it neutral, then you can short Bitcoin. And so until that kind of that presses a little bit. But overall, I think that the Grayscale Bitcoin Trust going into negative, under NAV isn't necessarily tied to institutional interest. You can have that go negative while there's still interest in other products. Because the Bitcoin is not redeemable from the fund, it's a little bit different dynamics than say if they could just kind of redeem Bitcoin, or basically if Grayscale had more of a mechanism to sell Bitcoin. At the current time, the only way they sell Bitcoin is they're gradually drawing down their Bitcoin from from paying their expenses, but that's at a 2% rate per year. But I do think the lockup periods can add a period of volatility. But I think as far as Grayscale is concerned, I think the primary damage is done there, and so I'm kind of looking at other factors like say the Bitcoin mining hash rate migration, as well as anything else on the ESG front or the regulatory front. Those are factors that I think could move price a little bit more. Then I'm also just watching the underlying network build out, like the things that are happening in the Lightning Network, things that are happening in El Salvador, the different partnerships that firms like NYDIG are doing with banks to make it more access points for the protocol, things like that.